Morning, guys. Something that caught my attention yesterday I thought was worth digging into this morning. Didn't happen in Australia, happened in London. So you can see on the FTSE Open yesterday evening, had this massive aggressive rally right from open, okay? So the first 15-minute bar up about 32 points. So very aggressive start to the session. So, most traders, I suppose, look at that and go, okay, that's great. FTSE's bullish. Interesting question to me, as always, is okay, well, what effect does this have on other markets and the behavior on other markets? One thing I've learned over the years is that these markets don't operate in isolation. Call it the algo, call it whatever you want, but essentially you've got market participants constantly repricing, trying to find inefficiencies across markets, etc. Bullishness in one market often transfers to other markets, as an example. So how do I interrogate that? So I want to jump into Mosaic and I want to look at other days when we've seen this price action. So when the UK 100 has rallied more than 30 points. And then specifically, I want to explore how far the Aussie kind of goes to the upside and downside after seeing that early strength from London. Okay, so the most efficient way to do that is, find the overnight high, overnight lows, add it to the high-low probability model. Now I'm just going to swap this out for one I prepared earlier, just because that session is finished. So some of this has dropped off this morning, but this is what the percentile looked like overnight. Okay, so what I kind of want to highlight here is that you can see around that same time, we obviously had this aftermarket fall again, which if you remember from yesterday, 93% of the time we're going to break these lows overnight. But at that same time that the UK rallied, the high of the night was around 16 points. Okay, so just going back to the model here, it's saying that the mean when that happens is about 72 points to high, okay? And we're currently sitting at 16 points at that point. So you can see here at that time, the percentile was, somewhere between 0 and 4%. So the lowest 4% out of that entire distribution was this high here. So what does that suggest? So you got to compare, I guess what I'm doing is comparing the two. So the market at this point wasn't behaving the way it normally behaves under these, similar conditions. So as I said, it was sitting in the lowest 4%. So that was really, really interesting to me. So I guess what can you do about that? I think traders, they focus on absolute movement a lot, market up, down, etc. One way to frame it, I'd encourage you, particularly looking at these models, is, is the market behaving normally? So, yesterday, London, very strong risk appetite. Historically, Australia follows, yet at that point it wasn't, okay? And I know people will say, well, the S&P was falling, etc. That's all true. But the great thing about data is it really doesn't give a shit about that. It's just showing you, it's not delving into different stories and narratives. It's just showing you that at that point in time, 96% of other days broke higher than the level that they were at. So summing up, if that historical tendency is valid, we'd normally expect Australia to move higher from there, and it obviously didn't get to the mean later on. But I guess what I'm trying to say is that there was a strong case that the Aussie was going to move higher. So in terms of operationalizing that, got my tongue twisted. Again, what you could do, add an alert in Mosaic with, mean 78 points, etc., and just look at, I guess, the live price versus that, so that you can surface that behavior when it matters. Anyway, that's today's framework. I'll see you tomorrow.